Want to know more about technical indicators? Well, in this video, I'm going to mention a few and tell you a little bit about them.
You're such a nice man.
Some of the most popular indicators used out there right now are MA, or otherwise known as moving average or simple moving average. What does it do? It is used to calculate the average movement of the market over a long period of time. MACD, otherwise known as moving average conversion diversion, developed by Gerald Appel, and it's based on the difference between two moving averages of different lengths, a fast and a slow moving average. Then we have the Bollinger Band, developed in the 1980s by John Bollinger. Simply what it does, it adds and subtracts a standard deviation calculation. Then we have the Relative Strength Index, otherwise known as the RSI. What the RSI does, it measures the magnitude of recent price changes between overbought and oversold of the asset. Then we have the Fibonacci retracement. Fibonacci retracement is named after the famous mathematician Leonardo Pisano, nicknamed Fibonacci. Basically what it does, or what it is, are two horizontal lines indicate where the support and resistance are likely to occur. Last but not least, the Ichimoku Clouds. They were founded by a financial journalist named Hosoda Goichi, or Goichi Hosoda, however you like. The Ichimoku Clouds basically, they combine multiple indicators on a single chart. The Ichimoku Clouds provide insights into potential support and resistance zones. Please keep in mind that technical analysis and technical indicators do not take away any of the risk involved trading into the financial markets. So it is up to you to use your own knowledge and risk appetite when you apply them. Once again, this is Neil from Fondex. Make sure you subscribe to our channel for more videos. See ya!